Hello, finance professionals and market enthusiasts. Welcome to another edition of Weekly Global Market Outlook. I'm Tolga, and over the next few minutes, I will take you through the critical happenings from the past week and what is in store for the markets in the week ahead. Stick around as we dissect the data, provide insights, and prepare you for what's likely to be an eventful week in global trading. Let's dive into last week's activities. The S&P 500 saw a modest decline, bringing an end to its 3-week rally streak. The Dow dropped nearly 2%, while the NASDAQ 100 held its ground primarily due to optimism around chip stocks and artificial intelligence. US inflation continued to pose concerns, with the consumer price index at 2.7% for November, indicating potential challenges in reaching the Fed's 2% inflation target. Bond yields came under pressure, increasing to around 4.4% following persistent inflation worries. Over in Europe, the ECB delivered its fourth benchmark lending rate cut for the year amidst a downgraded economic forecast, now expecting GDP to grow by just 0.7%. China's shift to moderately loose monetary policy and plans to weaken the yuan in 2025 have shaken markets this week. The yuan dropped 0.3%, impacting Asian currencies like the South Korean won and Australian dollar, reflecting Chinese proactive economic strategy. Oil prices rebounded, marking their first gain in 3 weeks, fueled by geopolitical factors including Russian and Iranian sanctions, while gold reflected mixed sentiments, landing up at 1% for the week after initial gains. As we look forward to the coming week, here's what should be on your radar. Monday, the week begins quietly with no major reports scheduled from the US. Market participants are likely to position themselves ahead of Tuesday's data. Meanwhile, key economic releases from China and Germany are expected, including Chinese industrial production and retail sales, as well as Germany's manufacturing PMI, providing valuable insights into the economic performance of these countries. Tuesday, pay attention to US retail sales and industrial production reports, which could have ripple effects across the equity markets if results deviate from expectations. Both figures are anticipated to come in lower than the previous month. Wednesday, the spotlight will be on the Federal Reserve as they conclude their policy meeting and are widely expected to announce a 25 basis point rate cut. Fed Chair Jerome Powell's press conference will be crucial for insights into future policy direction. Additionally, the release of the latest dot plot will provide a vital glimpse into the Fed's projected rate trajectory. Thursday, economic data flows continue with the third quarter GDP third estimate from the US alongside crucial unemployment claims data. Friday, wrap up the week with the personal consumption expenditure price index and consumer sentiment, which will provide further indications of consumer spending trends as we transition into 2025. Globally, keep an eye on the Bank of Japan and Bank of England's interest rate decisions on Thursday, various data from China, and potential developments in the ongoing geopolitical tensions which might sway market sentiments. To sum up, while last week presented its fair share of volatility and strategic positioning, this coming week holds the potential for significant market movements with pivotal data releases and central bank meetings. What are your thoughts and predictions for the week? Drop them in the comments below. Don't forget to subscribe to our channel for continuous updates and hit the bell icon to stay notified. Together, let's keep navigating these uncertain waters with insight and precision. Thank you for watching, and we will see you next time.